Welcome back to the Quarterly Call. All content is for informational purposes and is not investment advice. Please consult with an investment professional. Today, we're embarking on a really fascinating exploration of Airbnb's Q2 2025 earnings report. Just came out.
Right.
And look, this isn't just about the numbers, the balance sheets, that sort of thing.
No, definitely no.
We're really trying to understand the strategic shifts here. These kind of forward-looking moves that are genuinely reshaping how we all travel.
Yeah, the whole landscape.
Exactly. We're going to uncover some really interesting nuggets of knowledge, I think. Everything from their financial performance, which was strong, to some like cutting-edge AI stuff they're doing and how they're expanding, way beyond just finding a place to stay.
A big shift.
It really is.
Yeah.
So as we sort of peel back the layers, I want you, the listener, to think about this question. What does a company like Airbnb, their performance, what does it tell us about, the bigger economic picture?
Yeah.
Or changing habits, how we experience the world?
That's a great frame. And you're right, the earnings call itself, it's a gold mine, really. It gives you such a rich, kind of detailed picture. When you unravel it, you see not just where Airbnb is now in the market,
Right.
but also where they're headed strategically. And that, by extension, tells us a whole lot about the future of travel, leisure, the whole sector.
And you get different perspectives on the call, too, right?
Yeah.
Not just the execs.
Exactly. That's what's so insightful. You've got the top brass laying out the vision, sure. But then you also have these sharp analysts from, major firms asking tough questions, offering their takes. So you get these multiple lenses, different angles on the company's direction, and like the tricky market dynamics they're navigating. It really helps piece together a much fuller picture than just, say, reading a press release.
Okay, good point. So let's jump right in then.
Yeah.
The snapshot of Q2 2025. Performance.
Yeah,
The headline seems to be, well, they had a phenomenal quarter.
they really did.
Genuinely exceeded expectations across their key metrics. That's always a strong signal, right? Business momentum.
Absolutely strong signal.
We're talking some pretty impressive figures here. They reported 134 million nights and seats booked, which is up, 7% year over year? Solid.
That's a lot.
Revenue hit $3.1 billion. That's a climb of 13% from last year.
That's significant growth.
And profitability. Adjusted EBITDA reached $1 billion, showing a healthy 34% margin. That's actually up a bit from 32.5% last year.
Right, margin expansion. Always good to see.
Yeah, and rounding it out, net income was $642 million, earnings per share $1.03, growing 16% and 20% respectively.
Strong bottom line growth, too.
What I found particularly interesting, though, and maybe telling, was how travel demand seemed to really pick up steam from April through July, even with some, economic uncertainty floating around earlier.
Yes, that acceleration is key. It suggests travelers are pretty resilient right now.
Okay, so let's dig into that. What's the deeper significance of these numbers, that acceleration you mentioned?
Well, it's exactly that. That 7% growth in nights and seats booked, it's not just growth, it's accelerated growth, especially compared to Q1.
Ah, all right.
May and June bookings actually grew faster than they did in the first quarter. That tells you consumer demand for travel is strengthening, remarkably resilient, even with those broader economic jitters you mentioned.
So the travel market looks pretty robust then.
Robust and strengthening, yeah. And that new metric, nights and seats booked, that's really telling, too.
That's so.
It clearly signals they're moving beyond just, traditional stays the nights part. They're actively bringing in services and experiences. That's the seats.
Right, makes sense.
It's not just semantics. It's a strategic move, positioning themselves for a much bigger piece of the whole travel and leisure pie.
Got it. And regionally, how did that play out?
Yeah. The regional breakdown is fascinating. Latin America was really leading the pack. High teens growth, super vibrant market.
Wow.
Asia-Pacific followed, mid-teens growth, still strong recovery and adoption there. EMEA, Europe, Middle East, Africa was middle single digits. Steady, but maybe more mature dynamics.
Right.
And North America, their biggest market, grew low single digits.
So quite a difference.
Huge difference. And that's crucial because it shapes their global strategy, right? It shows where adoption is rapid and where they maybe need to innovate more.
Like focusing more on the LATAM or Asia-Pac.
Potentially. Or finding new ways to grow North America. And that shift, like Latin America gaining about 2 percentage points of business share from North America,
Right.
It's subtle, but it shows where the growth engines are really firing and how their business is diversifying globally.
Interesting. And all this financial health, the cash flow you mentioned earlier,
Yeah.
that gives them room to maneuver.
Oh, absolutely. It translates directly into strategic flexibility, generating $1 billion in free cash flow just in Q2,
Wow.
bringing the last 12 months to $4.3 billion with a 37% margin. That's huge. Plus, they've got, what, $11.4 billion in corporate cash, another $11.1 billion held for guests.
That's a massive cushion.
Massive. It lets them make big, long-term bets, invest in growth, explore new things, and return cash to shareholders.
Or like the share buybacks.
Exactly. $1 billion repurchased in Q2, another $1.5 billion left on the old authorization, and then they announced a new $6 billion authorization.
$6 billion. That's huge confidence.
It really is. It's already brought their share count down 8% since 2022. It shows they believe in their valuation and are committed to shareholder value. It speaks volumes about their outlook.
Okay, that paints a really clear picture of financial muscle.
Hmm.
So with that strength, what are these 3 strategic priorities they keep talking about? How are they actually putting them into action? Sounds like more than just corporate speak.
Oh, absolutely. These are the bedrock, the guiding principles for their growth.
Yeah.
And they're executing on each one pretty concretely.
Okay, break them down for us.
So pillar 1, perfecting the core service. This is all about making the basic Airbnb experience, finding and booking a stay, as good as it can possibly be.
Right, the fundamentals.
Exactly. They're focused on these sort of operational improvements. Things like tweaking the checkout process to be smoother, improving the messaging within the app, refining how they show listings, maybe personalizing them more, offering more flexible payment options. Individually, maybe small things, but together,
They add up?
they really add up. Boosts user satisfaction and ultimately revenue. And a huge piece of this is that new AI customer service agent they rolled out more broadly in the US.
Ah, yes, the AI agent. How's that working?
Apparently really well. They say it's reduced the number of guests needing to talk to a human by 15%.
15%. That's significant.
What's huge? Think about the efficiency gain. Faster resolutions for guests, frees up human agents for the really tricky stuff. It's using tech smartly to fix a core operational pain point.
Okay, that's pillar 1. What's pillar 2?
Pillar 2 is accelerating growth in global markets. This is where they're looking beyond their big established markets like North America for new growth engines. And it's working. Their designated expansion markets have grown at twice the rate of their core markets for 6 quarters straight.
Wow. Consistently doubling the growth.
Yeah, it shows they're getting the product right, building brand awareness, and driving supply and demand in these key countries.
Any specific examples?
Japan is a great one. They ran a targeted campaign there to boost domestic travel awareness. And in Q2, Japanese travelers booked more nights than Q1, driven by a 15% year-over-year jump in first-time bookers.
So the campaigns are working.
Measurably. They also highlighted Brazil, Germany, India, Latin America more broadly, all showing strong, often double-digit growth.
So diversifying their business.
Exactly. Core markets are still the biggest chunk, but this growth in expansion markets is vital for long-term sustainability. We mentioned LATAM taking share from North America. That's this diversification in action.
Okay. And pillar 3, that was the big summer release, right? Expanding beyond stays.
Precisely. Expanding beyond stays. They called it their biggest launch to date, which tells you how important it is strategically.
What did it include?
2 major new things. Airbnb services, think chefs, photographers, that kind of thing, and a completely reimagined Airbnb experiences.
Okay.
And to tie it all together, a brand new app designed to make booking homes, services, and experiences seamless, all in one place.
And the reaction.
Massive buzz. Over 13,000 press stories, nearly 660 million social media impressions. Huge attention.
Wow. But are people actually liking the new stuff?
Seems so. Early guest feedback is incredibly positive. The average rating for services and experiences is 4.93 stars.
That's really high. Higher than homes even.
Actually, yeah. Homes averaged 4.8 in the same period, so very high satisfaction. And they're seeing tons of interest from potential hosts, too. Over 60,000 applications to host a service or experience since launch.
So the supply side looks promising.
Very promising. It signals a strong pipeline. Look, it's early days, but the company clearly believes services and experiences can become huge, multi-billion-dollar businesses for them over time. It could fundamentally change what Airbnb is.
Okay, that summer release sounds like a really big deal. You mentioned the buzz, the potential scale.
Yeah.
But let's get into the nuts and bolts. What are the specifics of these new offering services and experiences,
Mhm.
and how are they trying to, integrate them properly so they actually achieve that scale?
Right, it's not just about launching them, it's about making them stick. Let's start with Airbnb experiences.
Okay.
Historically, the big problem was just awareness. Lots of people didn't even know Airbnb offered them.
Yeah, I can see that.
So the summer launch was designed specifically to fix that, make them much more visible. Now, the strategy to boost the attach rate, getting home bookers to also book an experience, has a few parts.
What are they?
First, building what they call resident supply, basically focusing on really high-quality, unique listings. That includes these Airbnb originals, hand-picked top-tier experiences.
Gotcha. Quality control.
Exactly. Second, creating more entry points, integrating experiences right into the home booking flow. So when you're looking for a place, relevant experiences pop up, much easier to discover.
Makes sense. Seamless.
And third, just generally raising awareness through marketing, platform design, etc. But here's a really interesting angle. The local demand.
What do you mean?
They found that 40% of bookings for Airbnb originals are from locals, not just tourists.
Right. 40%.
Yeah, people looking for cool things to do in their own city. This massively broadens the market beyond just travelers.
That's a huge potential market.
Huge. Right now, they're focusing on perfecting this in key cities like Paris before a bigger global rollout. Get the model right, then scale. They think a lot of travelers would book an experience if it's easy and compelling.
Okay, that's experiences. What about Airbnb services? You said that's even earlier.
Much earlier, yeah. They basically launched like 10 different businesses at once: photographers, chefs, masseuses, trainers,
Yeah.
all these different service categories.
That sounds complex.
It is. So the focus now is trying to crack it in a few key markets. Los Angeles seems to be a major test bed. The goals are similar. Build out the catalog of services, increase the attach rate with home bookings, but the really big long-term prize for services is also that local demand.
Right, like getting a chef for a dinner party at your own home.
Exactly. Even if you're not traveling, only about 10% of service bookings are local now, but they see that as a significantly larger opportunity down the road.
If they can pull it off.
If they can pull it off. The satisfaction ratings are super high, around 4.93 stars, which is great, but they're clear. This is a longer time horizon bet. It takes time to build supply across so many professional categories.
What's the ultimate vision there? Just those 10 categories?
Oh no, the vision is a catalog of services, anything you can imagine, all integrated, but that's way down the line.
Okay, and how do they ensure quality, especially with experiences? It seems crucial.
It's paramount. And this is a key difference from homes. Every single experience is vetted before it goes live.
Every single one.
Yep. Profile checks, credential checks, making sure hosts have the right licenses, certifications like food safety for a cooking class or a license for a therapist.
That sounds intensive.
It is. But they believe it's why the ratings are so high, 4.93 for experiences versus 4.8 for homes. That quality control builds trust.
Can they scale that vetting process?
They believe so. They use third-party vendors for specialized checks and have built sophisticated internal operations. They see it as essential for making the market work efficiently and keeping standards high.
Right, that makes sense. So zooming out again, we've got the core improvements, the global expansion, these new services and experiences. How does this all fit into their plan to keep growing, maybe even accelerate?
Yeah.
What's the big picture strategy for market share in tech?
It's definitely a multi-pronged attack, trying to fire on all cylinders. A big piece is U.S. market acceleration.
Even though it's their biggest market already.
Exactly. They see it as still heavily hotel-dominated. Their stat is only 1 in 10 nights out outside the home in the U.S. is on Airbnb, much lower than elsewhere.
So huge potential still.
Huge potential. So they're focused on closing those user gaps, converting hotel users. How? Addressing pricing affordability, that total price display helps. Better pricing tools for hosts.
Wow.
Targeting underpenetrated demographics, they mentioned the U.S. Hispanic population. Heartland states. Improving usability, offering more payment options. Basic blocking and tackling, but important.
I'm getting more supply, more places to stay.
It's absolutely critical. Co-hosting is a big success story there. Experienced hosts managing properties for others. 100,000 listings now, 10 million nights booked via co-hosts. They think that could unlock millions and millions more homes.
Wow.
Plus, hammering on trust and safety, that air cover guarantee, ID verification, richer guest profiles, all to make hosts more comfortable.
Right.
And targeted supply acquisition in tight markets, even onboarding more hotels, especially boutiques and B&Bs, to fill gaps during peak times or for certain traveler types.
So they're not satisfied with just 10% growth.
Definitely not. They explicitly said they want to re-accelerate using all these levers: homes, services, experiences, hotels.
Okay. What about those big event partnerships, like the Olympics, World Cup?
Yeah, major events and partnerships are a surprisingly powerful lever now. Tour de France, Lollapalooza, Milan Winter Olympics, FIFA World Cup,
How do those help exactly?
multiple ways. They're huge supply generators. The Paris Olympic sponsorship, over 50% jump in Paris homes listed. It's a great hook for new hosts, low commitment, high urgency. Host for the event, maybe stick around.
Ah, interesting hook.
They also help with policymaker relations, building trust in key markets like Italy or across North America for the World Cup, and, obviously, huge brand trust and awareness benefits. Associating with beloved global brands, reaching passionate fans. Plus, it highlights Airbnb's ability to spread tourism beyond city centers.
And now they can cross-promote more than just homes.
Exactly. Makes the partnerships more efficient, they said. Promote homes, services, and experiences to all those attendees.
Smart. And their marketing overall, is that
Yeah.
changing?
Big time. The marketing strategy evolution is key. They're shifting to marketing the entire Airbnb, offering homes, services, experiences as one bundled thing. Makes sense, right? Book a home, you might want an experience.
Yeah, logical.
And a big channel shift, too. Less TV, more social media. Why? Because that's where people get travel inspiration now. Less searching on Google, more browsing on Instagram or TikTok.
Right, the inspiration phase.
Exactly. And social media lets them target better, link directly to listings, measure results more easily. It's very performative, as they say.
Are they spending a lot more on marketing then, that $200 million investment?
Good question. That $200 million is mostly for building the new business's operations, go to market, getting supply for services and experiences, not a big hike in programmatic advertising spend.
Okay.
Their overall ad spend as a percentage of revenue is stable, and they still have that huge advantage. 90% of traffic is direct or unpaid. Lets them spend way less on performance marketing than competitors.
That 90% direct traffic is incredible. What about the app itself? Any changes there affecting behavior?
Yeah, the app redesign seems to be having a real impact. They're seeing more bookings starting from the homepage. People are shifting from searching for specifics to more of a browse and discovery mode.
Like scrolling through Netflix or DoorDash.
Exactly like that, which is great for Airbnb because they can subtly guide users towards places where they actually have supply available. Boosts conversion, captures people just looking for ideas.
Louder.
And people are using the trip tab, the itinerary part, more during their trip. This creates a point of sale during the trip to sell services or experiences, especially last-minute ones.
Ah, the upsell opportunity.
Precisely. They think other OTAs haven't really cracked this homepage discovery or the in-trip app usage, giving Airbnb an edge.
Interesting. And booking lead times. Are people booking further out?
Yeah, they confirmed lead times have normalized after being compressed earlier. They've even lengthened a little bit into Q3.
Which is a good sign for confidence, right?
A very positive sign.
Yeah.
Suggests people are feeling comfortable planning ahead again. Stability.
That's a really impressive range of strategies. But looking even further ahead, what about AI? They mentioned that. And other long-term bets. It sounds like they're really trying to position themselves for, well, the future of travel.
They absolutely are. And their AI strategy is pretty ambitious, but also quite practical in its rollout.
How so?
They decided to start with customer service, which they called the hardest problem. High stakes, need accurate answers fast, can't have AI making stuff up, right?
Definitely not in customer service.
So they built this custom AI agent using 13 different models trained on tens of thousands of real conversations.
13 models. Wow.
Yeah, highly tuned. And it's already cut down human agent contacts by 15% for U.S. English users.
We talked about that, yeah. Significant.
Huge. And the plan is to expand languages this year and next year make it more personalized and more agentic.
Agentic. Meaning?
Meaning the AI won't just tell you how to cancel a reservation. It'll know which one you mean and just do it for you. Or even proactively help plan and book your next trip based on your history.
Whoa, that's a big leap.
It is. And then next year, they plan to bring AI into the main travel search experience.
So conversational search.
Presumably. The long-term vision from the CEO is for Airbnb to become an AI-first application in the next couple of years. He thinks most top apps will become AI native.
AI is the core, not just a feature.
Exactly. And their point is it's not just about having the best base AI model, it's about tuning it, building custom interfaces for travel using their unique data.
Makes sense. Are they worried about external AI agents like Google's or others disrupting them?
They seem open to it, actually. While they see Airbnb as offering something unique, not a commodity, they said they're certainly open to integrating with external AI agents for lead generation. So maybe allowing third-party AI planners to book Airbnbs? Pragmatic.
Interesting. What about buying other companies?
Yeah.
Acquisitions.
Their acquisition strategy remains opportunistic. They mention Hotel Tonight as a past success. They feel they're better prepared now, having rebuilt their tech platform from the ground up, and with this broader strategy covering travel and living. But the key is integration. The cost and hassle can't outweigh the benefits. They'll be selective.
Okay. And other longer-term bets
Mhm.
beyond AI and services experiences.
Yeah, a few things. A significantly more aggressive approach to hotels. They see it as a really compelling opportunity, especially for independents, boutiques, B&Bs who want those high-value Airbnb travelers.
So not competing head-on with major chains, but complementing.
Seems like it. Homes are still the heart and soul, but hotels supplement supply, especially in top markets. Also, long-term stays over 30 days remain a huge market. A large chunk of their nights already?
The digital nomad effect.
Partly, yeah. And just reiterating the potential of services and experiences, they truly believe each could easily be a multi-billion-dollar business, especially if they crack that local demand for services. That's the game changer.
And they feel they can develop all this fast enough.
They say their product development pace is massively ramping up. They're iterating much faster between the big biannual releases, now fixing things, adding features like new payment methods quickly.
What change?
Investments in their new tech stack and infrastructure. It's just a better environment for engineers to build and ship stuff faster. More product velocity is crucial.
Okay, incredible scope.
Yeah.
Let's bring it back to the bottom line then. Given all this activity, the investments, the tech, what's the financial forecast look like? What's their investment philosophy driving this?
Right. Balancing growth and profitability. So for the Q3 and full year 2025 outlook, they're seeing good demand now. That acceleration from April to July was encouraging, especially in the U.S., but they expect tougher year-over-year comparisons later in Q3 and into Q4.
Because last year was really strong then.
Exactly. Q3 2024 saw acceleration, and Q4 2024 had over 12% nights growth. So the bar is higher this year.
Got it. So specifics for Q3.
Revenue guidance is $4.02 billion to $4.1 billion. That's about 8% to 10% growth year over year. FX impact minimal. Nights and seats booked growth similar to Q2. Average daily rate, ADR, up slightly, mostly due to FX.
And profit.
Q3 adjusted EBITDA expected over $2 billion. Big number. But the margin will be a bit lower than last year's Q3.
Why lower margin?
Primarily those investments in new growth services, experiences, and some policy initiatives. They expect a similar margin dip year over year in Q4 for the same reasons.
But for the full year.
Full year, they're sticking to their guide of at least 34.5% adjusted EBITDA margin, so still very profitable overall, even with the investments. That $200 million for new businesses in 2025 is part of that.
So the investment philosophy is basically spend now for future growth.
Pretty much. They're very clear. Don't expect meaningful revenue from services and experiences right now.
Okay.
But the opportunity is significant, and they're building with a multi-year view. That $200 million is targeted for this year. No other big launches planned for 2025 beyond those.
And looking to 2026.
They expect investment in new businesses to continue. Some costs, like headcount, will naturally carry over. The overall approach is invest strategically in the new stuff while driving efficiencies in the core business. A balancing act.
So the Q2 results really show them firing on those three cylinders.
Core, global growth, and beyond stays.
Yeah, strong execution across the board. They believe this alignment, plus their financial strength, positions them really well for long-term value, not just chasing short-term results.
Yeah, okay. So wrapping this up, What does this all mean for us, the travelers, the people watching this space? We've seen a company that's not just growing, but really strategically investing, right?
Yeah.
Enhancing the core, using AI, launching these ambitious new categories like services and experiences. They're making some bold moves, changing marketing, fully embracing AI. It's a fascinating story of a major player really evolving its whole identity. It really is. And if you connect all those threads, like you said, to the bigger picture, Airbnb's journey from just homes to this AI-first application vision with bundled services and experiences, it raises a huge question, doesn't it?
Which is,
Will the future of travel be less about just, finding a room and more about this fully curated, maybe even predictive on-demand itinerary, something that anticipates what you need from planning right through the trip itself?
wow, like the app knowing what you want before you do.
Kind of. It suggests this massive transformation of the whole industry is happening, and Airbnb is pushing hard to be at the forefront, moving way beyond just accommodation to this integrated travel and living experience. The question for you, the listener, is, are you ready for that?
Definitely food for thought. Absolutely. Thank you so much for tuning in to the Quarterly Call. For more episodes, please remember to rate and follow our show. Until next time, stay curious and stay informed.